Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, August 19th, 2020. I am Frank Ochoa, aka PivotBoss. Right now, we finished the previous session here at new highs for the ES. You can see right here that we've climbed up and reached our 33.85s, which has been a target for us for a while. But what you're starting to see is a little bit of selling pressure at the moment. It's just now kicking in here. But we had this narrow range, right? This is the narrow range we've been talking about. It actually extends even farther back right here. And we got a close above it in the previous session for the first time. We finally got to push through those 82 halves. And now we're sitting in a very narrow range up here of 31% in overnight and pre-market trading. A moment ago, intraday VWAP was taken, offered. So was VPOC, and price is now back below the previous session's close price. And what this can do is it can develop a rejection of this high that leads to a major test of this midpoint. And if this midpoint can't hold, you then become a likely outside bar down, at least briefly, something like this day over here where it took out the high, and once it rejected, it dropped through the previous session's mid and into new lows. So again, that is the potential, but the overall trend has been up. So even if that bar should happen, it would likely be another buy for a continuation until it proves otherwise. And that's exactly what happened here. So right now, watching the previous session's high price of 33.90 and the previous close of 33.88 quarter, that's going to be very important early on. A failure to hold that level could lead to a retest of 33.78, the previous session's mid. Below that would be the low. Overall, this market hasn't even tested the 8-period pivot-based EMA this entire month. So at some point, we do need some sort of reversion to mean. But again, this market has been very, very quiet here in the middle of August. All right, let's take a look now at the NQ. Now the NQ right now is showing a bit more signs of weakness ahead of RTH. And I want to be a little bit more cautious about saying weakness when it comes to NQ, because the NQ has been so super bullish. Any short-term weakness, whether it's 1 day or even 3 or 4 days, it has been bought for a continuation higher. Since the March lows, it has just been a stellar trend to the upside, with big rotations to the upside after every single pullback. And we're seeing that right now, a continuation and rotation higher after the recent pullback. So right now, you do have to be cautious about selling this market or fading it, obviously. But when you do get to a cycle high, there is a tendency to fail on the high and then do exactly what we talked about. Are we about to see this type of day where we've already rejected a bit of the high, and now we work back toward the midpoint of the previous session, and if that midpoint can't hold, you push through the low and become a bearish outside day, even briefly. And that could be the same type of deal here, especially if the NQ is going to lead lower. The level to watch here is going to be 11,375. 11,375, and that's basically the low of the day. Right now it's 374s. If price can't hold that zone, it starts to open up a little bit more weakness, and that can open this thing up. But even if we do have a 1-day pullback or 3 or 4-day pullback, it's still likely a buying opportunity until proven otherwise. As a matter of fact, right now, a pullback as deep as 11,058 half could still be a great buy on a swing basis, based off of this key range right here. So you have that key range high, key range low. Here's your key range mid. It has broken out through the top of the key range, which is 11,058. A pullback into that zone could provide a buy for a continuation into 11,723. So right now we are looking at some selling pressure that could lead to the previous session's low, or perhaps a bit below that. That would be 11,268. So right now trading 11,377 half. Any pullback into 11.4 short term could provide a little bit of a weakness here back toward those lower targets. We'll see how that plays out. Okay, now taking a look now at crude oil. You'll see here with crude oil we have a range here that is developed at these highs. We have a pretty strong high, pretty strong low, and we've traded in the upper half of this range. in a range that's been very, very lackluster. I mean, it's just been sideways, not a whole lot of action, low range days. As a matter of fact, right now the 5-day average range over the last 5 sessions is $1.03. The 10-day average range is $1.20 right now. So that's very, very narrow. Additionally, we've been trading more than 2 times that range if you look back just a month or 2 ago. So overall, this is very, very quiet price action. The range just hasn't been there. This is the first time that it's spent a couple of days here trading above 42.5 to 43. It still can't close above 43 right now, and you can see today's high is right in that zone. So again, this 42-43 area has been a lot of resistance, and based on the fact that it hasn't gone down, may suggest that we are about to see a big squeeze through that level that could open it up to the upside some more. So again, right now, inside day, very lackluster at the moment, but with all of this compression up here, something's got to give at some point. The fact that this thing has been trending up suggests more upside, but if we cannot hold 42.5, it will begin to open up a pullback of some magnitude, likely back toward 41s. All right, let's take a look here at GC. Now, gold has been very, very bullish. We got a very nice strong low here that we mentioned would likely give us a high probability target of reaching the 1981.70s. That's the midpoint of this sell-off, and that was pretty solid. We got that midpoint, and now we have ourselves the new key range. So that key range high, low, mid is very, very important here for gold. At some point, we will likely see a continuation to the outer targets, and the upper target here is 2196 and 2304. So basically 2200 and 2300 are the next major upside targets here based off of this impulse sell-off. If price were to come down here below 1874 and see a trap down here, that could get you 1800 to 1850, could get you up toward as high as 2300 down the road if we were to pull back that deep. So that's a key range trap idea that you can use down the road if we were to see something like that. For now, we have an inside day at the moment, 50% of ADR session, and we are above the breakout point here of 1975 and also holding the 1981.70. So as I mentioned to our group here in the trading room, as long as price holds the 1980 level, and I mentioned this in the pre-market video yesterday as well, this has a good shot to continue higher toward 2089 to 2100. As soon as it fails to hold 1975 to 1980, that would open up a rotation back down to the key range low, or at the very least 1930 here for a major retest. So right now everything's still flowing higher. This is a very, very bullish market, and we have a strong inside day, 2-day lows with a major key level below. If we stay like this today and kind of trade sideways, or even if we drop, perhaps we could see some sort of flush event like this that takes you down, takes prices out, and stops out below 75s and then closes higher. That would be the next thrust move to get us up to 2089 to 2100. So that's the idea right now as we continue to trade gold. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.